So yeah, I'm John Webb from Experian, and I work in our consumer affairs team, which is leading our public education work. So I spend most of my time out and about talking to people about credit reports and credit scores and lending decisions and everything to do with credit. So it's my job to firstly know about it and just help people understand the importance of it and a little bit about how to get the best from their credit score as well. And I'll briefly say as well that, to intro this, that I'm from Experian, but we're one of the three main credit reference agencies in the UK. There's two others, there's Equifax and TransUnion. To begin with, I'll say you can get your credit report for free from all three credit reference agencies. And I would encourage you to do that, because if you're doing a full financial assessment, although they're mostly the same across all three credit reference agencies, there can be some slight differences. So if you're checking it, do it with all three. Make sure you know what you're looking at across all agencies. So that's a brief intro to me. And so if we can, I guess, jump onto my slides, what I will say is I've got my chat box open. So any questions that you've got as we go through, pop them in there and I'll try and answer them as we go through. But I'll try and leave some time at the end to go through some questions as well. And there's already one in, which is I love this question, which is ClearScore not a fourth credit reference agency? So ClearScore are a company masquerading as a credit reference agency, but that's not uncommon, by the way, and I'm not. They do some wonderful stuff. So it's really, there's three credit reference agencies, but there's lots of companies like ClearScore. So like ClearScore, like MSE Credit Club, for example, all of these organizations where you can get your credit score for free or your credit report as well, they get their information from one of the three credit reference agencies. So what I would say is if you use ClearScore, so ClearScore, for example, use Equifax. If you're looking at your ClearScore report, you're looking at your Equifax credit report and credit score. So if you go out and you use those services to get your score and report, that's absolutely fine. It's a great way to do it, and sometimes save you some money as well. But just make sure you know where you're getting it from. So if you're not going to Experian, Equifax, or TransUnion directly, then make sure you know where your report is from, because the last thing you want to do is check 2 or 3 different services and then figure out that all you've been doing is checking your Equifax credit report with 3 different services as well. So it's always a good idea to do that. Okay, so I'll jump in, and if we can move on to the first slide, I'll just briefly intro what I'll talk about. So it's a good chance for us just to quickly have a view of what's on your credit report to figure out actually what's important and what lenders are looking at. And then I'll move on to a little bit about lending decisions, and when you apply for credit, what really matters with your credit score as well. And finally, we'll just end this bit about support that you have. So this includes things about if you want to dispute information, customer support, and we'll pick up some stuff here as well about the coronavirus and things that you could do in terms of your credit agreement and managing those during the pandemic. So we'll talk about that as well, but by all means, chuck your questions in as we go through. So if we jump onto the next slide. And I'll go through this fairly quickly, by the way. So don't, if you want me to stop or go back or answer something, by all means do. But the first is that we'll look at what's on the credit report, and 4 easy sections to split your credit report into is public records, credit accounts. Credit accounts, by the way, is where all of your agreements are. So it's usually the biggest part of your credit report. Any links or searches, and searches are applications for credit. And finally, consumer data, so things that you can add yourself to the credit report. So we'll look at it in those ways. So if we could jump on to the next slide. The first part of this is where we'll split public record and into 2 sections, the electoral register and public financial data. Now, the electoral register is important. If you can register on the electoral roll, then it's important to do so. But first is because when you apply for credit, lenders are going to be looking at confirming your identity. Who are you, and do you live at the address you say you live at? And the way that we can easily confirm that is on the electoral roll. If you're not registered, it can sometimes just lead to a refusal immediately for credit, which is then, is concerning, because you'd have to reapply or get them to reassess it, for example. So it's easy to go on and make sure that you're on. Lenders, if you move around, it doesn't make too much of a big deal, but lenders like to see continuity. So what they want to see is you've registered, you've moved, you've registered again, and you keep doing that when you move. And the final bit about electoral roll is if you don't register when you move, you can leave yourself susceptible to being a victim of ID fraud. So if you move address, and lots of people do this, by the way, is if they don't set up forwarding for mail, or they haven't switched everything over in time, what can happen then is letters come through to your old address, and there might be a new tenant or a new person who lives in that house or flat, and then what they do is they'll pick up some of your details. And if you're still registered on the electoral roll, it means it's so much easier for them to then apply for credit in your name. So what you want to do immediately is, ideally, within a day or two of moving, is making sure that you've contacted the council or on the Gov website, and just change and make sure you've updated your electoral register. So I would do that immediately as a way of being cautious as well. And the second part of this is public financial information. So this is where any insolvencies, now insolvencies are things like bankruptcies or individual voluntary arrangements, and county court judgments go, or court judgments, sorry, because they're not county court in Scotland. But this area of your report is typically one of the most serious sections of your credit report, because it usually signifies there's been a serious financial problem. But it's a good place to introduce the 6-year rule, which is almost everything on your credit report will stay for about 6 years, and then it gets removed. Once it's removed, by the way, it's just deleted from your report. It's not visible to anyone else. There are a couple of exceptions to that. Now, the first is bankruptcies, because you can have restrictions placed on your bankruptcy, which might extend beyond the 6-year period. And that's particularly true if you breach any of your conditions of the bankruptcy. And there's a couple of others that I'll explain as we go through. But what I'll say about this section is that if there's anything on here that you have on your credit report, and it's there for a genuine reason, like an illness or redundancy or bereavement, what you can do is add what's called a notice of correction. It's a short note to just explain the circumstances around there. You'd really want to do that if it's genuine circumstances, and it just allows you to just give a bit of a picture to the lender as to why that happened. Okay, if we jump on to the next one, please. Great, so I'll jump into the credit accounts bit. Now, there's lots of information in here, so I'm going to keep this bit quite simple, which is, and the credit accounts, like I said at the beginning, is usually the biggest section of your credit report, because it's the primary section that lenders will be looking at when they make an assessment. And what's in here, by the way, forms the foundation of credit scoring, which is using the past to predict the future. And the past is, how well have you managed your credit agreements in the past? And if they've been managed well, I suggest it's highly likely that you will manage them well in the future. And that's exactly what your payment history does on these accounts. So although all of your accounts will show on here with various admin information like your date of birth and your address and so on, how much you pay on a monthly basis and outstanding amounts, they'll show with all of that information. But a primary piece of information here is the payment history. Now, you can see this on here as your zeros on the account, which zeros means up to date and paid on time, which is great. But if you miss one payment, it will go to a 1. And if you miss 2, it'll go to a 2, and so on. And that run usually goes up to about a 6. And once you pass or get to a certain point down the road of missed payments, the lender can default. And a default is where the lender closes the account, fixes it in time. So the default date will be from that date they issue the default, and with however much is outstanding as a debt at that point in time. Now, if you're on the run up, so if you're missing payments and you're on the run up to a default account, that can happen almost at any point from, could be from 3 months onwards. Lenders aren't bound, by the way, to just wait for 6 months and then do it. It could happen at 4 months or 5 months. So what I would encourage people to do is if they have missed or late payments along the way, then it's important to talk to lenders to make sure you're getting the most support from them and entering some type of agreement, whatever agreement that is, and whether it's just making a reduced payment for a certain length of time, that will usually stop the account going to a default. Now, we'll look at some scores later and you'll start to see why that's probably a good thing if you don't get your account to a default status. So if we jump on to the next one, please. Super. So on the last slide, by the way, I'm just going to talk about this really briefly, but on the last slide, on that default, there was a little note, and the little note said debt assigned to Keys member. Now, Keys members are the lenders who share with Experian, is what we call our lender database. Now, what that means is a default, and this is quite common, is if you have a default, it's sold to a debt collection company or a third party to collect. Now, that debt collection company will likely share their information with one of the credit reference agencies. So they'll put a little flag on there to say whether it's assigned to someone who shares their information with Experian, because what that means is you'll have two defaults on your credit report. So they want to make sure that they know that you've got a default here, and this is one is the second one is exactly the same. It's the same default account. But they also put a little note on there if they share it with a lender who doesn't share with Experian. So you know that although there's a default here and it will show as satisfied because it's been sold, there's a default somewhere else. But a couple of things to highlight here, which is flags that typically are put on. And, you know, especially if we're thinking about payment arrangements now, things around the coronavirus, is this arrangement flag. So if you enter an arrangement with a lender, no matter whether the account's in default or in a current status of, you know, let's say missed or late payments or about to, if you make an arrangement, they'll put this flag on there and it'll have a from date and an end date. And that's the only information that they share. So they don't send anything more about what the arrangement is. But it does mean that other lenders will see it when you do it. And the important thing about entering into an arrangement with a lender is if you enter into an arrangement, now no matter what that is, if you're not making the agreed original terms of the agreement, the account will continue to fall into arrears. So if I'm 1 month late and I call my lender and say I want to pay half of my monthly amount for the next 4 months to get me back on track, what that means is that because you're paying half, every 2 months, you'll fall 1 payment behind. So by the end of that agreement, you're going to be 2 months behind, and that will show on the credit report. So even though you entered into arrangement and they agreed, they said, okay, you can pay that, that's fine. You'll still need to bring the account up to date at the end. And that's something to think about as well if you're speaking to lenders about payment arrangements for coronavirus related credit accounts or issues. The important thing with this is, and I'll talk about this slightly later as well, is for the past 6 months until October 31st, the credit reference agencies didn't show coronavirus related payment holidays on credit reports, and not even showing late payments or the arrangement flag. That changed from the 1st of November to be the situation where I went back to normal, where the flag might go on and the late payments will show, but that may change again. So the FCA is currently discussing it again. I think because we've gone back into lockdown again and people are still affected, then that might happen again. So it's just something to be aware of. And the final part here is credit cards. And we'll talk about this a little bit as we go through, because credit cards are probably one of the most efficient ways of improving your credit score, but they're also one of the easiest ways to bring it down as well, depending on how you use it. And lenders send us through more information about credit cards than they do about other accounts. And that comes in 2 forms. The first is cash advances. Cash advances are where you're taking money from the cash machine from your credit card to pay for something else, which to lenders will be very risky. So they share with us how often you do it and the amount that you do it for as well. And also they send promotion codes. So we know that sometimes people will be switching credit cards to get an interest-free or a reduced interest deal from another credit card and moving balances. What that usually means is they will switch you and you will be given a credit limit if you open a new one that's very close to the balance that you're transferring. So you're suddenly using almost all of your available credit, which is a bad thing for your credit score. So they note it on here to say that you're on a promotional rate and that's why your limit is so high. So if we can jump on to the next one, please. Great. I'll cover this very briefly, which is that rent accounts can show on your Experian credit report. We're the only credit reference agency to put them on at the moment as well. Through social housing, the landlords can send us the data. And if you're a private tenant, you can use companies like Credit Ladder or Rental Step or Credit Builder to submit your rent accounts, and then they'll show on your Experian credit report. And it's just giving people a bit of extra credit for paying such a big expense on a regular basis. Now, with either of these, this whole rent system is opt-in. So if you don't want to share your data, whether it's through your landlord or not, you can opt out and refuse to do it. And much like if you did it privately and you were going to fall behind with any payments, then at the same time you would also you probably be best to opt out then, so that you don't start showing with any late payments on there.
Just for actions in the
Okay, if we jump on to the next one, please. Great. So this one is, again, quite a simple one. It's your searches. It's all your links and searches. So the first is searches. We call these, by the way, searches, but they're where anyone looks at your credit report. And there's two types, probably the two types you've heard of, which are soft and hard searches. Easiest way to distinguish between them is a hard search is whenever you've applied for credit formally. That will show on the credit report, and that is seen by other lenders as well. Anything else, so whether it's an identity check or a quotation or a comparison site search, that's all soft searches, ID checks, all soft searches. They show on there to you, but they're not seen by anyone else. They don't have any impact on your score as well. So that's the difference between the two of them. And generally with hard searches, we say don't apply for more than 2 or 3 things every half year or so. You know, it's not hard and fast rule, but it's just keeping your applications down to a minimum. Then we've got linked names. So if you've ever been known by another name or changed your name when you've been married, we'll link up these names on your report to make sure it's all the same information. Linked people. So if you ever apply for joint credit with anyone else, then you will have something called a financial association. It does not matter if you did get the credit in the end. So whether it was refused or whether you just chose not to take that credit that you applied for, the link will still show. Now, this is one of the exceptions to the 6-year rule, because a financial association stays on the credit report forever until you tell us that it shouldn't be there anymore. And the important thing about this is that if you're applying for credit and you're associated to someone, the lender you're applying with can check that person's credit report. And if they've not been great at managing their credit in the past, that could affect the outcome when you apply for credit. So it could mean, it could mean you're refused, or it could mean the interest rate is higher, so you'll pay more for, the credit you were going to get anyway. So it's important that if they're not there, you have to do what's called a financial disassociation, and you do that with all 3 credit reference agencies separately. And the final one here is linked addresses. So every lender that you have an account with or done an application with will put a link to them and your address in here. And whenever you move address, they'll also update the link and they'll show your new address in here as well. So it's not uncommon for this section to be quite big with 20, 30 different entries. That's nothing to worry about. The only time you would probably take a look at this on your report and perhaps raise a query is if there's an address on there that you don't recognize and that you've got no connection with. And that's when you probably want to ask the credit reference agencies to investigate that for you. All right, if we jump on, please. Great. So, so this is kind of the final section of what's on the credit report, the last couple of bits. Now, the first is notice of correction. I've talked about that before, but this is a note that you usually put on. It's up to 200 words to explain something, but there's a few scenarios you can use it. The first is if there's negative information. We talked about that. Could be default, late payments, but a period in time where you can justify some kind of negative information. You might want to add the reason why. The next is electoral roll. So if you can't register on the electoral roll for whatever reason, you could put this note on here and it'll just say, I can't register on the electoral roll because, and I can prove my identity, so please ask me. And they'll usually come to ask for bills or an ID document from you. The third reason is for a vulnerability. So if you have a vulnerability like a gambling addiction, for example, or a mental health addiction, either of these things that might cause you to take out credit you can't afford to repay, then you can add a note on there to tell lenders not to lend you credit. And finally, you can add a password to your report, which is if you have been a victim of fraud, you might want to add a password which lenders will ask for when you apply for credit, and only you should know the password. So it's just an extra level of security in there as well. All right, if we jump on, please. Oh yeah, our last one here for consumer data, which was actually just released and announced on Monday. So you're an early group to hear about this from Experian directly, but this is called Experian Boost, which is quite exciting because it allows you the chance to connect your bank account. It's all free, by the way. Connect your bank account using open banking, so it's free and secure, and start getting some credit for regular bills and subscriptions that have never counted for credit scores before, but now will do. So things like a council tax, your council tax bills, your Netflix, your Amazon Prime, for example, things like your digital subscriptions, which you pay on a monthly basis, but you've never been given credit for. And now we're going to do that, and you can boost your credit score. And the good thing is it can only go up and it can't go down. If there's nothing that positively impacts your score, if you do it, then that's fine. We don't do anything with it. We just leave it and your score stays where it is. And it's free, if I didn't say that, which means, by all means, go on and check and see if you can, boost your own score as well. Okay, if we jump on to the next one, please. Yeah, great. So I haven't seen any questions come through yet, but we've covered our kind of what's on the credit report, and I'm just going to talk a little bit about scores and support now, but keep questions coming through if you've got any. So if we jump on through to the next slide, please. And I'll talk about just a couple of credit myths just to set the scene. And I'm not going to cover them all because I'm sure Adiola can send this through. But the first is that there's a credit blacklist. So this is a really popular myth where people think if there's anything negative about you, suddenly you won't be able to borrow from any lender. But that's not the case. So no matter what's on your credit report, there's almost always a lender who's willing to lend. The problem is if there's anything negative, it usually reduces your options. Usually means you'll pay more in interest or you won't get the same credit limits. The other one is that anyone at your address, let's say family members or people who used to live there before, will affect your score, which good news again is that they don't. It means your credit report is standalone and it's just yours. People who live with you or did live with you in the past don't affect your score at all. And the final one I'll talk about here is credit reference agencies make lending decisions, which we don't. I'll talk about this briefly, hopefully in a couple of slides, in the next slide. So it's a good intro to that, but the decision is always made by the lender, which is good to know, because I think some people can get pushed to us or another of the credit reference agencies by lenders. So if we jump on to the next one, please. So this slide just covers how a lender actually makes that lending decision, and looking at the three things that usually factor into that decision at the lender's side, which is firstly their own record. So do you bank with them now, or have you banked with them in the recent past? And if you have, they will have some sort of record about how you ran and how you managed your account, which they can factor in. And the second part is your application form. That's really our way of saying your affordability check, because that's where it's going to include the things that aren't on your credit report, like your salary, your dependents, possibly any savings or investments that you might have, and any other expenses that aren't factored into the credit report as well. So that will help assess your affordability. And the final part, and albeit quite a major part, is your credit report. But it will take all of those bits of information and it'll put them together, and each lender will generate its own credit score for you. Now that credit score, ultimately that determines whether or not the application is accepted or refused, and whether or not, what interest rate you'll be charged or what credit limit you'll be given. So the score that you get with us or with any agency will give you a good indication of how well you're performing and how the lender will judge your credit report. But it's always good to keep in mind that whenever you apply for credit, it's the lender's judgment, the lender's assessment, because they look at additional things when you do apply for credit. So if your score is 999, but you're unemployed, it's still unlikely you'll get credit, even though you've been given a great score. So those are the kinds of things you kind of want to think about when you are applying. And then if we jump on, please. Great. So this bit is really about how to apply for credit. So there's an important point to stress here, really, which is at the moment, particularly through coronavirus, people are looking for ways to reduce the cost of debt. Now, one of those ways could be debt consolidation. It could be transferring debt to 0% deals on credit cards. But we know that those offerings on the market have reduced considerably since March. There's been some improvement over the past few months, but it's just being aware of the process of searching for credit is probably a little bit more difficult. So I would say make sure that you're using, whenever you apply for credit cards, loans, or mortgages, comparison and eligibility checkers. Now, we've got one on our site, and I'm not selling you that one because they've got them on all the major comparison sites as well, where you can search for these credit products. But what I really want to stress here is that you can do this as often as you want, and it doesn't impact your credit score, but it will tell you some wonderful things about what will happen when you apply for credit. Now, the first is your eligibility. So as a percentage, are you 80, 90, 95% eligible for a product? It's not 100% guaranteed, but it's a good indication. But then the next one is pre-approved, which means that effectively, bar any serious issues, the lender has already approved you for this product and you will get this product, which means there's no guesswork there involved in making that decision. You know that you'll get it if you apply for it, which is great news, because that check, any of these checks on here don't impact your credit score, which puts you in the best position. Now, the next one is you could get to know the real rate of any loan application that you make. And for anyone who doesn't know, by the way, when you see a loan advertised, and usually on the TV, and if it's Sainsbury's loan of 3.4% APR, 51% of people, so just over half of all people, will be given that rate of 3.4%. The other 49% will typically be given another rate, and that rate will usually be higher, but you don't know that until you apply. So what happens is you apply, you have the mark on your credit report, but what returns to you might be an interest rate of 15%. So what this does is help remove that guesswork, and it will tell you, okay, if you apply for this product, you will be given a specific rate, and this is what it is. And then the final thing it can also do is tell you the credit limit. So if you're applying for a credit card, for example, it can tell you and guarantee you what credit limit you will be offered before you apply. So anything that you're doing, switching credit, consolidating debt, just looking for new credit to build your credit score, use these comparison services to check it, see what you're eligible for, and then you can just pick the one that you're most likely to get, or the one that's most suitable for you as well. All right, if we jump on to the next one, please. Okay, so I'll cover here a little bit about credit scores, because I think this section really helps to visualize how things will affect your credit score. And I mean, most of the time people want to know particularly what happens to bring my score down. So we'll cover that in a second. But if you register to vote, can boost your score by 50 points. Having a credit limit, in fact, that's one of the polls that we had earlier. So having a credit limit of over £5,000 can affect it. So the higher you get in terms of your credit limit, the better it is for you. But in terms of credit cards, if you use less than 30% of your credit card limit, you can gain 90 points. This is why, by the way, credit cards are really good for building your score. Because if you get it down again to a low or zero balance, now low is about £50, but if you can get it down there, you can boost your score by another 60 points. So you can see that if you have a credit card, the best way to run that credit card is spending a few pounds on it every month and paying it off in full, so you don't pay the interest on that few pounds. It keeps it active, keeps the balance low. It's a perfect way to improve your credit score. But looking at some of the things that will bring it down, we talked about paying a bill late, and if you do that, it could reduce your score by up to 130 points. Now, this is just Experian numbers, by the way, so out of a score of 999, but it's still a fair chunk. It can take you down 1 or 2 bands. From excellent, you could drop to fair by missing 1 payment. So you can kind of see the impact of there. And then particularly where you use over 90% of your credit limit on a credit card, it could reduce by 50 points as well. So again, that's how you use a credit card well. And the last 2 really to talk about here, having a judgment or insolvency. So this is the public record section we spoke about earlier, could reduce your score by up to 250 points. And the final thing, which is why I said it was really important to try and avoid those defaults on your report, because they could reduce your score by up to 350 points, which is huge in terms of your score. So you always want to try and avoid those where possible. All right, if we jump on, please. Yeah, jump on to the next one, please, because I'll just talk about this now, which is all around support and education. So the first thing is disputes. So most of the time, credit reports are very accurate and lenders have to record the facts. But from time to time, if there is anything on there that's not that you disagree with it, but that it's factually incorrect, we can query it for you with lenders. So if you contact us, we do this for free. We'll speak to the lender on your behalf. We'll tell them to investigate it, and they'll come back to us and say, okay, it is as it should be, or let's change the information, and we'll do it or they'll do it. But either way, it's usually a hassle-free way to get us to, or get some help investigating these complaints with lenders. If we jump on to the next one, please. The second process, which is an almost identical process, is if you're a victim of fraud. So if you are a victim of fraud, the big problem here is if you find out, which usually happens at a time where you didn't know you were a victim or when you apply for credit, but usually you'll see a multitude of things on your credit report that need investigating and removed. Now, they probably will most likely be limited to a group of applications on your report, depending on when you discover it, and a group of accounts on your report. But those accounts might also be in a negative status. So there could be defaults, there could be high debts, which means that if you did it on your own, that would mean contacting, 5, 6, 7, 10 different lenders yourself. But we can do that for you. And again, this, by the way, we don't charge for this service. So just so you know, I'm not selling you this. It's just an easy way for you to tell us, I have 10 different things on my report I need investigating. Can you do it all for me? And yes, we can. So we'll go to the lenders, we'll get them to investigate. They'll come back and, 9 times out of 10, they'll be removing the information. And that's fine. Sometimes they will ask you to contact them on your own, because they may want to ask a few more questions about, the account and how it's set up and so on, if you know anything. But we also go through processes to just check in on your credit report every now and again to see if everything looks as it should do. We're able to track if there's anything that looks a bit suspicious and then update you. And then you can do things like adding the password to your credit report as well. So you can just add some extra security for the near future. Okay, we'll jump on to the next one, please. Yeah, I'll just briefly talk about this because I just want to point you in the direction of the help center, because everyone, I think, there's so many different circumstances about why, what you need and the situation that you're in. But I just want to say there's a huge help center on our website, which covers so many issues. And particularly we've focused recently on getting a number of issues like financial abuse situations like domestic abuse and modern slavery, or if you're in problem debt, or if you've got problem gambling. So lots of situations where if you're worried about your finances, if you have problems with your finances, it will obviously have a knock-on effect on your credit score. But the important thing is to learn how to kind of deal with those and where to seek some help. So we've got a big suite of guides and help that you can look at if you want to understand a little bit more about maybe something fits into your scenario. Okay, we'll jump on, please. Oh yeah, so I'll highlight this really quickly. It's just an example, because I talked about it earlier, so I won't spend too long on here, but it's just an example of where we've been kind of beefing up some support for people in these vulnerable situations where they may have things like gambling addiction. So what we've done is created a dedicated web page for this. So if anyone has a problem with gambling, they can visit this web page. They can just read the guidance about what happens if they add the notes to the credit report. And then there's a simple online form. And what that does is they can add a note that just says, please do not lend me any money. Or you can type it in yourself and say, please, I have a gambling addiction. Please do not lend me any money if I apply for credit. And that should put a blocker in the way, so that when you do apply, and for gambling addicts, that could be at 3 a.m. in the morning. And the good thing about it is it stops that auto decision. It means that the application is always forwarded to someone to review and look through manually, because they have to check that statement, which means you've provided a safe space of time, so they can't get this emergency credit that they need and they'll spend on gambling. But also the lender shouldn't then probably issue the credit and should probably refuse it, which is a good thing. It means that people can't get more into debt to fund this habit as well. And it's got some support on there as well about where to go if you do have this problem. All right, if we jump on, please. Yeah, so finally, and I think just about finally in this section, I'll talk about kind of COVID support. Now, I think to the most part, most people have heard about payment holidays. I'll talk about that a bit, but we said earlier that payment holidays between, I think it was March, April until October 31st, didn't show on credit reports. So they weren't noted, there were no missed payments, there were no flags that there was any arrangements. And that was great, because that meant that you could take those payment holidays and then suffer no long-term consequences on your credit report. Now that changed from the 1st of November. So just like we said, if you take a payment holiday now, or when I say payment holiday, this could be a complete freeze in payments, or it could be a reduction in payments as well. If you do one of those things, then it's highly likely that you will have late payments showing on your credit report, so missed payments showing on your credit report, and this flag that says there's an arrangement in place. But I would stress here that it's really important to talk to lenders to figure out what agreement am I entering into, for how long, and what are you going to show with the credit reference agencies, and that makes you crystal clear about what's going to happen. But I guess with this is, we talked about payment holidays, and that's usually, it's the most common option for support through the pandemic, which is taking a break from payments. But there are other support that lenders can offer. So we always stress, firstly, you have to agree it with the lender before you do anything. So never just cancel your direct debit and then decide, I'll ask the lender in a bit to do the payment holiday. So make sure you speak to them first. But the most important thing is just get the right support for you. So lenders offer a kind of multitude of forbearance. It could be a complete reduction, a complete freeze in payments. It could be a reduction. It could be switching deals to interest only for a while. It could be changing your interest rate. It could be that they increase the credit limit on a product for a short while. Things like overdrafts as well were all increased for interest-free up to £500. So that's changed, could change again. But it's just important to be aware of what support is available for you and what's right for your circumstances. Because if you take a payment break or a payment reduction, interest still adds up. So you might have more, you'll have higher balances and probably higher monthly payments afterwards. So it's thinking about not just now, but long term, what can I do? And if we just jump on to the last slide then, please. Oh, yeah, I'll leave this up while I answer questions. This just says about where to get your report. So by the way, I talked at the start, free stat reports from all the credit reference agencies, sorry, stat reports, they're called statutory reports. You can get your Experian score for free on the Experian account every 30 days. And that's the same thing that you can sign up to get Boost as well. And if you ever really wanted it, there's a credit expert subscription, but it's probably not applicable in most cases. So for all you need to know, scores are free and reports are free. Okay, so I've sped through that and I've seen a couple of questions that come in. So I'll start answering those, but we've got a few minutes now, so any more questions you have, just submit them and I'll start answering them now. Okay, so there's one here which is quite good. So what's the maximum percentage usage on a credit card limit before it starts reducing your score? Well, that's an interesting one, because we always say, now we say as a general rule, if you can get that percentage below about 30%, 25, 30%, that's good. But just think of it like a sliding scale. So the higher you get, the more it's going to impact your credit score. So the lower you can keep it, the better. Essentially, you could go out and you could spend another £10 on your credit card, and it could reduce your score by a couple of points. And that's just how it works. Just the more you spend and the more you get closer to your limit, that will, likely impact your credit score. So your best place is below about 30. But to get it, absolutely what I would say is perfect is keeping it below 50. And if you can do that, that's great. Not everyone manages their cards like that, by the way, because you might spend for benefits or points or whatever it is. So you might have high balances, but then pay them off every month. We'll just live with that. But before an application, if you are making an application, you'd want to make sure that you don't spend on your credit card in the same way that month, so that you keep your balance as low as possible. Okay, so we've got another question here. My credit company still charges me standard purchase interest of £10 every month, even though I no longer use my credit card. Would you know the reason? No, I don't know the reason. I'm just reading the question and just trying to figure it out. But if you've got, it sounds like you're on an account where they do like a charge for that. So there's a fairly big campaign, and I think it's probably led by Money Saving Expert at the moment, about bank accounts and cards with fees attached to them, because some people use the benefits that come with them, but a lot of people don't. So I think what I would do in that scenario is understand what the fee is for, and then whether you need that account. Because if you shouldn't need an account with a fee on unless you're getting some kind of benefit from it. So I would check that, and then probably might want to switch credit cards or not keep that one open. Okay, so one here about explaining the impact of balance transfers on your credit. Okay, so there's a few actually for doing the balance transfers. Now, the first is, and it'll probably sound a bit more negative than it is, because balance transfers are generally quite a good thing to manage your finances because you get good deals. But if you open up a new credit account, so a new credit card, and you balance transfer to that, usually what happens is they ask you how much you want to balance transfer. And if it's £2,000, they'll give you a limit of £2,250, just enough for you to transfer your balance plus the fee that they'll add. So suddenly what you've got is a credit agreement where your balance is right next to your credit limit, which means for your credit score, that's not a great place. Now, at the same time as that, you've also got an application for credit and you've got a new account showing on your credit report. Those two things will also drag it down, but they drag your score down temporarily. Once you've had that account open and you've paid it monthly for 6 to 12 months, those two are going to disappear. Those score factors are going to disappear, and suddenly you'll be in a more positive place. But depending on where your balance is, that's where you're really going to have an impact for your score. So I wouldn't tell anyone to not do it, because financially it can be a great way to manage your money and reduce your interest rate. What you really want to do, to be honest, is overall get that borrowing down and reduce it, which means whilst you're in the interest free, see if there's a way to bring that down as much as possible. Because the less debt you have, the better for your credit score. But what I would say is, if you're doing that, don't overly focus on your score, every day about what's my score going to be, because it's going to be a bit lower, but you're still managing it quite well. Okay, I think that's it for questions at the moment.
Thank you so much, John. Sandra, if you could go to the next slide, please. So if there aren't any other questions, or if you want to send John a private message, you can do that via the chat box, or if you want to think about some of the questions, you can email us. Our contact details are on the next slide. So it's hello@pinkdynasty.org, and we will forward any questions you have to John. Unfortunately, we can't share his contact details due to GDPR, but if you have an opportunity to follow him on Twitter, you'll be able to see that. So I don't know if John, if you want to share that, your Twitter handle.
It's just at John Webb. So I'll just put it in the chat now.
Okay, fantastic. I can see it there. So make a note of that. So if you do have any further questions which you want to pose to John, feel free to do so via Twitter, or you can send us your questions and we'll forward it to him later. We will be posting the video of this. So if you came in late, don't worry, you'll get an opportunity to view the earlier part of the workshop, and we'll also be sharing the slides later on. So it is now, what's the time? It's 6 o'clock on the dot, so we have finished. Thank you all for coming. Please take good care of yourself. And as mentioned earlier in the beginning, if you are going through any financial difficulty or hardship, please speak up, be open and transparent. The earlier you address it, the better it is. So if you need to contact your bank, please do so. Speak to your credit providers to see whether you can arrange some sort of payment plan. And also look on the government website. So that's gov.uk/coronavirus. There's some information there about financial support that you may be entitled to. Thanks again, and we hope to see you soon. So I'm going to end the session now, and once again wanted to thank Experian, but most especially want to thank John. So thanks. Can we give a round of applause to John? You can take your mics off if you want.
Thank you.
Thank you so much, John. It's been amazing.
Thank you. Thank you for having me.
No, thank you, as usual. So have a great evening, everyone, and take good care of yourselves. Bye.